Manisha, thanks a lot for that. Let's now connect with Mr. P.K. Mukherjee, Managing Director of Sesa Goa. Mr. Mukherjee, good morning. Thank you for joining us. Mr. Mukherjee, give us the status on the iron ore mining in Karnataka, and how is the development of Sesa Goa's mine panning out?
See, as you are aware that post Supreme Court order sometime in middle of April, we are expecting that the clearance, particularly in case of us, it was more of a forest clearance which was lapsed in the month of October 2012 to get it back. And we never expected that it will take so much of time. But it is progressing in its own speed. And as we see today, maybe another 10-15 days it would take for us to get the clearance in hand, and then only we can expect it to start.
Mr. Mukherjee, hi, morning. By when can we expect the production to begin from your mines in Karnataka?
See, as I said just now, that I expect that by July definitely we are looking to start, because of the stages of clearances which has already passed. So by July if we start, and then we have been given annual production capacity of only 2.3 million tons. So I don't think we should be in a position to consider anything else other than 2.3. That means it will be very easy for us to produce 2.3 million ton during the current financial year.
What is the status of the mining ban in Goa, and when is the next hearing on this issue?
See, July beginning the courts is reopening, but we have not yet got any specific dates. But we expect after the court opens, we'll get the date, and we'll also get the continuous dates of hearing for the matter to be heard. Going by the comments or discussion what has happened before the court closure in the court.
Your reaction then on the recommendation of the government panel on raising royalty on iron ore?
See, it is very difficult for me to take a guess there whether it is likely or unlikely, but the fact is correct that a government panel is considering, and which has come widely reported in the newspapers also, that 10% iron ore to 15% along with various other minerals, they are proposing an increase. If one looks at, this royalty increase is the prerogative of the central government, while the money goes to the state government. But however, this is a democracy, and everybody's views are considered, including the state governments. And I believe some state governments, not all, very few, are demanded a significant increase, and that's how this, in case of iron ore, a 50% increase from 10% to 15% is being talked about. But if one goes by the reasons why the state government's demands, the state governments were asked to give their comments, except for one, that is consideration of the revenue that would bring to the state government. Other points for them to consider was as a fiscal measure to attract investment, to promote mineral conservation, to encourage optimum utilization of the low-grade mineral resources, to bring royalty rates in line with international rates, to attract improved technology, to encourage export of minerals. Nothing except that first one out of the 7 other considerations.
Right. Fair point. So what is the total royalty outgo in FY12 and the expected increase if royalties increased up to, let's say, 15%?
You see, so far as Sesa is concerned, considering our grades, I think in the FY12, our average rates of royalty was about 300 rupees per ton. And that was considering based on the prices prevailing at that time. So if you put like with like, 300 will go to 150. And 150 rupees per ton, which is about $3, multiplied by 14-15 million from Goa, and another 2.3 now, 3 million, say about 18 million total. So $54 million for Sesa itself will be the impact if this current proposed hike is considered. Actually the industry was asking for, even FIMI has also asked for reduction in the royalty from 10% to 7.5%. I think that would have been more than enough.
So do you see iron ore exports declining going forward as Chinese economic data indicates a slowdown, Mr. Mukherjee?
No, I don't think today in India we can think of ramping up of the capacity, because everybody is talking about, including the courts, reduction of the capacities. So issue is not whether India will be able to supply to China. India, because of its geographical situation, I don't think supply should be any consideration, but it will take some time to get back that market. But putting the cargo into the buyer's hands in China, or for that matter any other parts of the world, should not be a problem, because ultimately it is a bulk commodity, it is a matter of price. So as you have seen already, because of that demand side reflection, the prices have substantially corrected downwards. And today, where India reference grade, highest grade of 63, is FOB price is only about $100, which couple of months back, which was hovering around $130, $140. So with $100 FOB price, and in our case of Goa grade 57, 58, which is about $30 lower than that, that is about $70. So you pay export duty of 30%, you pay 15% royalty, you pay local development tax, then you pay income tax if you have left it in income. I don't know though whether the business has to be destructed like this through the regulatory cost.
But Mr. Mukherjee, do you see prices of iron ore declining in next few months due to global slowdown in the steel sector, especially China?
No, on that matter, I still believe that the Chinese marginal cost of production, their domestic iron ore marginal cost of production, will act as a barrier on a longer term. So, which is $120 to $130. So, I think the $120 to $130 we can expect on a little medium time frame. Because today, what has happened, it will take corrections. It will have the correction, because at this price, Chinese marginal producers will go out of the business. That will create a void in the supply side, and that will again try to push the price back to $120, $130 level. That is for 63 grade.
So Mr. Mukherjee, what is the production target you have for FY14, and are you planning to ramp up production in Karnataka?
No, there is no ramp up in Karnataka happening. Karnataka quantity has been reduced. So we feel 2.3 will happen for Karnataka definitely. And Goa will depend on at what time we are allowed to start production. But as you know that in Goa we have already mined out materials quite a substantial quantity, about 4 to 6 million, I think about 6 million tons. We have in different processed ores or unprocessed ores lying in various places. So even if that is allowed to move, then to that extent we can book the sales.
Right, Mr. Mukherjee, appreciate your time and thank you for joining us. Well, after a 3% plus appreciation for the week gone by, there is plenty of buying, and Indian markets are holding on when there is very little support coming from Asian markets. What is the way forward for Indian markets, and do we have a trading bottom in place? More on that with Grish Nadkarni. He represents Avendus Capital.